Good afternoon, everyone. Gabe Velazquez here with you, Transparent Trading Solutions for a Tuesday, last day of February. Hope everybody is doing well. Let's get right into it, everybody. So, yeah, lots of chop. Nothing really changing since I was with you on Friday. As I mentioned in the Twitter. um, Yeah, we're kind of just thrashing around 4K, kind of give or take 20 points above, 20 points below. We did get some momentum, downside momentum here into the close to close out the month. We did come in short, so TTS we are short S&P coming in. We took a short right near the close here, so. The dollar continues to strengthen up. Bonds are still heading lower. So, you never know, but looks like we probably go down and test 3,900 at some point. The trades that we do are not day trades. So we could be in that trade for, last time I think we were together, or actually a couple of weeks ago, we did a trade. We picked up 90 points and we were in it for 3-4 days, actually into that holiday, President's Day. So we'll see if it works out for us. So we did come in short. Again, if we take out, we have that pivot at 347. Recall after that hot. What was it, the hot CPI, right? I can't remember which one, and then we came roaring back. So that is going to be the first, that 39.47 level on the S&P. See if we can take that out. And then on the upside, we've got 4K and then 40.26. So we got this big, messy. If you guys have been trading here, you know what I'm talking about. This big old messy kind of muddled up, whippy trading, big range. But these kind of ranges are designed to move out. So I think this could be the day where we finally get out of this. Obviously, the end of the month and that type of positioning also will generate. We did generate some momentum to the downside. So that's really where we're at on the S&P. NASDAQ. Also, similarly, looks like 232, and we have also that pivot on the NASDAQ right at the turn, that 11 to 934 area. So all in all, a lot of the same kind of dynamics, all the kind of range trading, lots of choppy. One of the things also, the Dow did get hit pretty hard. In fact, today as well into the close, it was down almost 300 points. So, again, 33,200 to, we're closed right at the low end of the range as well. And if we break that down, looks like we have on the Dow, looks like we've got another 400 or 500 points to the downside, which wouldn't surprise me in the least. Especially, if the dollar keeps rallying, and more importantly, we've been talking about rates really driving the train, if you will. So if we break 32,600, we could have a substantially lower contract. Yeah. What contract specific? The March. Yep. Yeah, we're in the March. Rollover is not for another 2 weeks. So we're fine. Yep. Okay. All right. Now, bonds also kind of range trading. We had rollover in the bonds. So if you're asking, Robert, yeah, the bonds are now in the June. So we did have a bunch of rollover across many markets. Grains all rolled into the K contract. Bonds have indeed rolled over into the June. What else? We had the metals also roll into the K contract. Silver, gold, copper. So those are all in the K contract. Okay. All right. Yeah, in fact, we're trying to get long silver, trying to get long copper. We missed copper by a few ticks, and the thing took off on us. So unfortunately, we weren't able to get on copper. If you're watching the chart, pull up the chart of copper, you can see we were right below where it stopped and then turned up. We're also trying to get long silver as well on the future side, but we're also long puts on the SLV, which is a longer term. We've been in that position for like almost 2 months now. So that's working out okay for us. I mean, not great. It's a really slow moving SLV. Only, I guess the average rate is like 43 cents. In any event, look on the. This is really the key is the 10-year. So the 10-year essentially bouncing between 111 and 112, and we really don't have another catalyst on the 10-year or any big catalyst in terms of economic data until next Friday because of the shortened month. You know, the government won't be able to, wasn't able to put out the non-farm payrolls for February because they don't have enough time with 2 days. So they're going to push that out till next Friday. So that's going to be a very, very key level. In fact, I wrote about it this weekend. If you haven't taken my newsletter, go ahead and sign up for that, or you want to join us for 5 days free. I am having another class coming up soon as well too. But that was really what set off the whole thing. If you really think about it, that January non-farm payroll really derailed the bond rally that was ongoing, and then but stocks have held up relatively well related to that. So in any event, look at the 10-year. I think if the 10-year breaks 111, that could also put pressure on stocks. And the dollar also has been rallying, and in fact had a nice pull back down to the 104.58 level, which is actually a nice accumulation, and now it's rallying back up again. So it's got to take out 106 really to get the next leg higher on the dollar. Again, if that happens, that will also put a lot of pressure on stocks. So it's going to be interesting, and on the metals as well. So the metals, all the currencies, obviously the inverse correlation with the currencies and the futures, and that also, I mentioned this the other day. We did open up some opportunities in some of the currencies. In particular, we're still trying to get on with the peso here. That may be coming in for us. Trying to short that. Also, some of the other currencies, the British pound, also starting to have some nice movement, and the Swissy breaking out. So a lot of these currencies are starting to get some really nice momentum finally, after being kind of locked in a range like the dollar for many months, literally almost for the last 3 months. So that's going to be that's really good news for some of you currency traders, that we're finally getting some movement in some of these currencies. In particular, the com dolls, and the British pound. So the Swissy and all those currencies are starting to really pick up. And then the metals, again, maybe detaching, because we had a nice pop in copper, gold. Actually, gold not so much, but it's interesting how the metals may be changing their stripes, if you will, against the dollar, because they had been pressured against the dollar. But if you look at the charts, silver looks like it had a nice pop. We were trying to get long again, silver and copper, but silver a little bit lower. We still could get it. I mean, if the dollar takes off here, I think we still have an opportunity to we still have an opportunity, I think, to get long some of these metals, especially if the dollar takes out the recent highs here. Okay. Now on the, I think I've been talking about nat gas. So nat gas, we are long boil. We've been long boil. We added to that position last week. I think I mentioned We keep adding to that position. We did have a pullback in nat gas today down to the there's actually a nice accumulation right around the 260, and we bounced off of that really nicely and had basically closed right on the highs at 277. So as long as we continue to pull back shallow, and continue the kind of the series of higher highs, looks like $3 is going to be the big one to get through. If we can get through $3, our target on this is going to be 6. The boil is sitting at right around 6 and change, but it's going to really start picking up because of the way it's constructed and the way it's levered out. So we should, if we get up to our target around 6, boil should be trading in the mid to probably 30s or so. Obviously still a long ways to go. I mean, we're sitting here, can't even get through 3, so we got a lot of work to do in that. We're also trying to get long oil, by the way. Oil looks like it broke out above 76 3/4. We did run up to 77, pulled back, but oil is starting to shape up a little bit with China reopening and so forth. So we are trying to get long oil using USO and the futures market. But just to not have to deal with a lot of the volatility in the whipsaw, we are implementing some option strategies to get long oil via the USO. Okay, so I do believe oil is probably at minimum headed back up to the 83, 82.50 resistance. You can see that clearly on the charts, and then eventually I do see oil. Which obviously not good news for us at the gas pump, but 82.50 is the major resistance coming in, and then beyond that, obviously we get into the 90 and then 95 area. With China reopening, I think that's really still long term very bullish on oil. China's just now opening. Their demand is going to be tremendous, as you might imagine, once they get fully off their COVID stuff and start really picking up the demand that they need for all the manufacturing and stuff that we all are familiar with in China. So that long-term story is really, really positive on oil. But again, in the meantime, you're going to get a lot of chop and lots of back and forth type of trading. Also, grains. So that's another one. I don't know if you guys have been watching the grain markets. Got hit really. There's news on Russia that they have a bumper crop, which really hit wheat. There also is a lot more news about maybe having a bumper crop here in the U.S. And if you look at, for instance, corn, soybeans will almost limit down today, which is really interesting, right? So that is presenting some really nice opportunities, both on the long and the short side in the grain markets. If you haven't looked at the grain markets, you can see over the last couple of days. I think I mentioned this also on Friday, where I mentioned that we were finally breaking out of these ranges in these grain markets, and they really picked up momentum today, especially the soybeans. But all in all, soybeans around 1480 are just back to the January lows, but they've come from 550, so they've dropped about 100 and close to 100 points from the highs, which was basically a resistance level. Kept bumping up around the 1550 and then finally gave way today. So it's going to be interesting if they can hold on to 1480 on the soybean contract, and then wheat coming down also. That was bumping around the $8 mark for $9 $8 for a while. In fact, it came up there several times, and now making a round trip back to the six like the 680 mark. So if you guys are interested in some of these markets that are actually doing something, corn, wheat, and soybeans, put on your radar. There is a gap on the corn around the 625, 630 area, and then all the way down to $6. So that also got hit pretty bad today. So you could wait for a pullback if you are a little skittish about buying. As price drops pretty with some momentum, you could always wait for a pullback and catch some of the supply zones that have been left as a result of the big selling that came about from that. Okay. So those are really the big markets. Also, doing a lot in the stock market in terms of looking at some of the earnings play. We have CRM tomorrow. That's the next kind of big high profile company to report. A lot of retailers really haven't done a whole lot. TGT reported this morning, and really the stock really didn't do a whole heck of a lot. So not a lot going on there. Just generally tracking the stock market, I think a lot of these earnings are just kind of hit and miss, and that's part of the reasoning why I think the stock market can't really get moving, because you got all these kind of conflicting messages from the economy. Inflation's still high, the Fed's still on a rampage. They're not going to, it looks like now they're going to raise 50, and so on and so forth. So bond market's also very important, and so that's again part of the challenge in trading these stocks. But the good news is I do believe today and coming in, I think it was just kind of holding for the end of the month, whatever, maybe positioning it to the end of the month. But I think today's move clearly is probably going to have some repercussions and maybe finally get us out of here. By the way, to the upside too. It could go to the upside as well. So you never know with that. So to recap, everybody, look at the 34,000 clearly is a big level, and we did break below. Just to recap on the S&P, we did break below. At least we've been. If you look at your hourly chart of the S&P, you'll notice how we kept banging down around 39.70 multiple times throughout the last 5 trading days. We broke down that today at the close. The next question becomes, do we get momentum and do we break the Friday low? Came off that PCE hot number, which is right around the 30, let's call it 39.50 for all intents and purposes. If that's the case, then we're probably got a straight shot to 3,900. But again, nothing is for certain in this environment. In fact, Friday, I think a lot of people got trapped. A lot of shorts got trapped because it looked like the market was headed lower, as we know. And then, what does it do? It rallies right back, all the way back up. So we've been in this range. But again, anytime you get into these ranges like this that persist for more than a couple of weeks, as we know, markets will not stay static, will not stay in these ranges for any amount of time. When that's the only thing we know for sure is that we're going to break out of these ranges, and perhaps today was the day. We'll see if that's the case, and we can follow through on the downside. Bottom line is watch the 10-year, because if the 10-year rallies, then that's part of the reason I think why we haven't really had a lot of selling, because the 10-year hasn't kind of stabilized as well. So I think that's going to be the next push lower. Okay. All right, everybody. Again, sign up for the newsletter. Hit the website. If I'm going to have a class coming up soon here, probably at the end of next week. I'm thinking of a topic. I actually know what I'll talk to you guys about it on Friday. I'll have the topic and everything ready to go. So if you want to spend 5 days kind of going through the charts with me for free, go ahead and hit the link below. It's the morning sessions. If you guys are OTA students, it's the kind of stuff I used to do before, and a lot of you are probably uh, already familiar with that. If not, have a great rest of the week. Now, again, we don't really have any major catalysts per se until the following week, but we do have at the beginning of the month and so forth. So, we got CRM tomorrow, so we do have that high profile stock, and still a bunch of earnings, but I think really it's going to be the dollar bonds that are driving the whole momentum shift right now. Okay. All right, everybody. Have a great rest of your week. I'll see you on Friday. Take care, everybody, and we'll see you soon.